Good day, everybody. Welcome to a summary video of a new, I don't know if you want to call it a course, call it whatever you want, set of files. I'm going to show you on Bitcoin and what I've been up to for the last pretty well 6 months, involving AI, quant research, if I dare to say that, plus the coding, all that goes along with it. So let me take you to that. All right. So we're sitting here in a new, I don't know, call it course, whatever you want to call it. Um, in this course, we've got data files. So if you look at the date, it's January 5th, 2026. I've been able to generate these files. These are from Rhythmic data, real data. We have created January 2nd of 2026. So really important to know this. Up until from October 2025, you can see here that Bitcoin hit its peak at 125K, and then it declined, and then it just bounced around, went into this quote unquote crypto winter for a few months. And then just recently, since the second, crypto's been on a tear, I call it, from 87 to 93,000. You have to wait up until a point to confirm that we have a solid breakout. But there's ways to get around this to trade crypto probably in the optimal time using this end strategy what I'm about to show you. So just remember up until January 2nd, we were in crypto winter mode. Okay. So that's important to remember. So that's when the data was generated. So we have hourly, minute, and tick data. So when we go into the high frequency trading, we can use the tick data, okay? Because the tick data is very important if you want to go down to that so-called microscopic level. So a few things here that I'm doing this purely for demonstration purposes to summarize what I've worked on. So in this case, what we've done here is with the power of AI, the LLMs that I like that seem to work well. It generated this quote unquote quant research paper equivalent. Okay. So what I did was I took one of the data files, the tick data, and I asked it to give me all the specific types of strategies I could apply using quantitative, high speed, high frequency trading strategies and compare them against each other. So it comes up with all the algorithms, all the explanations that you get from these quant researchers. Now, if you're not familiar with the math, it's kind of hard to really take advantage of it. As I said, one of the tips that you can get around that is using debuggers in a good IDE to do that, and also just to step through how these calculations come about. So I'll give you an example in a bit. So out of that, we're able to get a gander at um, all the available quantitative strategies for that data set on a tick level. So out of that, what we can do is we can apply different back testing. Now, I've not shown a lot of JavaScript, what it's capable of doing, but because of the latest LLM, we can do some pretty cool stuff. So let me show you an example. So this is just a plain old HTML file you can load in from your browser, embedded with almost 3,000 lines of JavaScript. Now, I wouldn't really sit there and brag about it, but it can be done. So here's a really good looking GUI. And in this case, I'm just going to use sample data. It's just easier, faster. So we're using Bitcoin trading days 504, 1 hour data. Load the data. I could load the file in if I want. I optimize it for the files I just showed you. Um, and then we have the data here. So here we're going all the way back to August. This might typify, you know, Bitcoin patterns, volume analysis, return distribution. Now, I've always said this before. So you could see here, we don't have the metrics yet for performance, risk analysis, all that loaded in. But when I do a run it back test with a look back period, initial capital, and so on and so forth. We have different technical types of analysis that we can look at for these different types of backtests. Totally different type of um, scripting when it comes to Python. Same prompting, just swapping out JavaScript to Python. But this is pretty sophisticated now with JavaScript. Okay. So let's just stick with the momentum strategy because the momentum strategy was the best one out of the data set, to be truthful. So we have here 100,000 K starting commission at 0.1%. So we could put that at whatever your exchange is at, Kraken, Coinbase, the like, and even Binance. So we'll run the back test, off it goes. This is important if, like, a lot of people want to build out wealth. Okay. I've said this before in my futures and options course. There's something called opportunity cost. So if you're holding Bitcoin long term, you can see here that you're going to kind of lose it and then you have to wait for the recovery. So in this case, we lose our gains between March and June. Yeah, this is all simulated. And then we have to go back in another 6 month recovery. So this is where it's key, where you have to know and understand about key concepts about just pure portfolio management to understand opportunity costs to retain your wealth, okay, and not be all in one asset class or one asset like the Bitcoin bros do. And then we have here volume analysis, returns distribution, and then we get into our performance. You can see here our compounded annual growth rate is negative 10%. The volatility is fairly high. Sortino's, Calmar, total trades, and a profit factor of 1. So that's not very good. Like, to optimally trade, you want to see profit factors of at least 2. So we can look at the risk analysis for this particular strategy. Value at risk. This is now all quantitative, expected shortfall, the beta, and so on. Okay. So we have a rolling Sharpe ratio, and this is where you get in more into the quantitative analysis. And then we have our signaling as well. And then we can look at the overall comparison of the strategy. Now that's on the forecast, I believe. Okay, so let me just pull up another strategy. I don't know. Let's say mean reversion might be a better one. So we'll do another uh, back test here. Okay. And you see here, we're losing money or gaining money, and there may be other assets out there that might do better. In our case, we could look at gold, silver. At that time was better. Maybe gold, silver may drop, and Bitcoin may come back along with other crypto coins as well. So it's a similar pattern. I'm not going to go on about this too much, but let's look at the forecasting now. So I'm going to look at the forecast of, let's say, I want to bump this up to 60 days. You can do a Monte Carlo linear regression or exponential smoothing. Monte Carlo seems fine to me. And you can see here we have over the next 60 days what's projected. Obviously, this is um, not not accurate. But you can see here it's kind of flattened out. So it may go back into that crypto winter where you could have higher returns in other assets, better performing assets. Maybe the stock market itself. I don't know. But you can see here, is it worth keeping your money in this asset like Bitcoin if you know you can get a higher return elsewhere? So there's that. Let me see if we can look at the comparison of all the different strategies. No. Okay, it doesn't matter. Anyways, that's the JavaScript. That's pretty good. Okay, so let's go over to our next one. Now, let me just show you. I'm going to provide you the source code here. This is the file package. We have the JavaScripting beta test, and here we can look at the PDF associated with this one for the JavaScript. And I'll just go over the code review for those that are beginning. You to really take advantage of this, you really should be quote unquote an accomplished developer in both Python and later on, as I show you in the C++. Okay. So there is a PDF available for that. Uh, all these is 100% AI generated. Okay, we're at a point now where people still think the AI doesn't work. That's fine for them. Works for me, no problem. So let's take a look at our Python uh, app. Okay, we have a typical README file, and this is just this also an introduction to my very pricey um, Quant Elite service, which is kind of thousands upon thousands of dollars, really geared towards the professional, institutional uh, portfolio manager or team or whatnot. That's who it's really designed for. But you can see here in this particular README file, it's pretty simple in this case. We've got the capabilities to analyze all these different strategies that I showed you in that document, all the quantitative stuff. Here's all the different features. We'll go through that. And we can also look at the different performance metrics. And again, this is obviously from a quantitative standpoint. Uh, I kind of showed you the technical analysis and fundamental has some impact on Bitcoin. But generally, to really take advantage of Bitcoin, you have to look at it from a quantitative perspective. All right. So you see here, we got the usual, and this is from portfolio analysis. I think of anything you can look at when you look at all these different analysis and all these different products or assets, you really have to understand portfolio management and metrics. So you're looking at the total return, the Sharpe ratio, Sortino, maximum drawdown is important, win ratio is important, the profit factor I've also just mentioned. And then here we have our value at risk, conditional value at risk, the skewness, and the kurtosis. This can only be seen from the options. Okay, all this data I'm showing you, that I showed you earlier, the hourly, the tick, that's from Rhythmic, meaning it's from the CME, okay, over that time period. Real world market data, okay? And this is option data and futures data. So out of that, when you're looking at option chains and option chain data, we can get further analysis techniques with skewness and kurtosis among a whole slew of other stuff. Okay. And as I said, we're using Streamlit. So this is the Streamlit app. I've shown this pretty well for the last 6 months. This is the most effective one I've seen. We can load in any of our files. The tick versus the open, high, low, close are going to be very different. Okay. So this is the same data set, same everything, except it's now in Python from the JavaScript. So here's our a strategy here. And you can see alone, if we had run a momentum strategy up until October during that decline, we probably could still have made money or this volatility uh, surface. Okay. We could still have made some money and probably minimized our risk on the downside of that slide back in October. We would still made money. But meanwhile, we have other strategies here, like the orange, that would have picked up the slack to at least get some profit still. And then we go in the you're not going to make money when you go in a crypto winter or side where everything goes sideways for a long period of time. Very very hard to trade that, with the exception when I'm going to show you in the C++. So all these different strategies we can see. At the same time, we can see what our drawdown comparison is. Obviously, the lower the better, the lower the risk. Here we get our strategy overall, which one's the best. Okay, so our total return being the VWAP. We also have our annualized returns. So there's different perspectives. So the VWAP is still the most high performing. Meanwhile, there's only really two: market making, which kind of was neutral, and the VWAP itself. And then we also have our volatility. And if we're able to reduce our volatility a lot in trading Bitcoin, like in a buy and hold strategy, the better off you'll be. So our Sharpe ratio, not very strong because, well, you're in a down market. So, but still being able to generate a little bit of tiny profit in that kind of environment's pretty good. So in here we have by the strategy ranking by the Sharpe ratio, and again the VWAP did okay. Okay, after a certain period. Okay, so there's no use in holding with a buy and hold because you're taking profit, then you give back to the market, and then it's just like one step forward, maybe two steps back, one two steps forward, one step back. That is not a smart way to manage money, especially if you've got a gob of it. Then we have the individual strategies as well. We can look at individually here. Again, same returns as I said before. Our goal here is to minimize our max drawdown and minimize our volatility. Okay, this is annual. And obviously, we want to boost our win ratio and have the higher Sharpe ratio. Just so people understand, if you want to get the attention of the money players, the family offices, the hedge funds, and the like, you need to have, for a period of time, maybe 3 months a year, a Sharpe ratio of at least 8. Okay, they'll come to you if you have that and it's been verified. Okay, so that's your goal. It's just to get a really high, uh, Sortino. And you can see here our risk metrics are not that great on this strategy here. Okay, but if we know that the VWAP or the market making was a good one, let's say the VWAP here. Let's look at this individually. Now, the thing is about this with this type of automation, um, we a couple of trends we can see here is that we can allow AI to do all our back testing for us. So also what I'm going to show you in the forecasting, we can see here, knowing that the VWAP is your best one, 6% volatility is pretty sweet for Bitcoin trading. Okay. Total return, not great, 1.5, but there, as I said, you would have done amazing, probably doubling your money if you traded silver or gold. Max drawdown's pretty good. Standard is you want to have it no more than negative 15%. The profit factor is not bad here, considering the situation, and this could be compared against all the markets out there. So you could factor that in as well. Okay. And then our win ratio, not the greatest, but considering the buy and hold here, and I purposely put this in there because if you're doing the buy and hold, you're any person to sit there and call themselves an investor is like, and then going out there saying on YouTube or wherever that they're an expert. I'll let you decide on that. But clearly, this strategy would have worked coming here at the beginning of December, and you would have done okay if you at least caught this upward move on the 2nd of December. Okay, so the drawdown's not bad. All the standard metrics for your portfolio for your Bitcoin. So that's this on an individual level on this type of strategy. And again, we have all the configuration parameters I mentioned earlier as well. Now we can do the forecasting. Let's see if we can do that. So it's already done it. So here, expected return, Hellman filter might have been better. Our best performing Hellman filter may have worked with a 3,000 30 yeah, $375 return, and so on and so forth. Okay, so this is a very powerful application. More importantly is the forecasting. Okay, you can clearly see here we are on the edge of January 2nd. We have here all of the overall, this is going into January 3rd. This might actually be accurate if you look at here on TradingView. Actually, it never is correct, but it was an upswing. So it's just using standard backtesting methods. Never right. Okay, but let's see if I can let's do this overall and see if this works. So it's reassessing here. So you can see here, based upon its performance, the momentum forecast is the better one for here. Okay, so if that's on a uh, I don't know how many days that choose here, 100 days, 100 bars, I should say. You can see here that, yeah, that's hidden Markov uh, regime. And then you can see here a little bit better, nearly 6,000 in a very tough condition, possibly. I don't know. Portfolio analysis as well, the different correlations between these strategies, uh, optimal portfolio. And if you were just to only trade Bitcoin, this is how you could portion it out and what strategies and so on and so forth. Again, this is never accurate. Okay? This is not investment advice, but this is the kind of thing you can do using these type of applications in AI, and that's why I have this demo software, I guess you could call it, just to show you the power of this and the direction you can go. Okay, so we know that. All right, so let's get into the more sophisticated stuff. So if you remember here, um, I talked about in this document the different type of strategies using high speed, high frequency trading like techniques. and comparing them within that JavaScript, within the Python Streamlit app. Now we can look at the, and I'm only choosing this out of hand because I know everybody wants to do market making. Okay? I only choose this because it's the most popular. Doesn't necessarily mean it's the best for this data set. I'm only choosing this because it's popular. That's it. So I can then go in and start developing strategies, the quant math, all the formulas and stuff, just specifically for market making. Okay, here's some coding samples, all in Python. And again, everything you're seeing here's 100% AI generated. This is how powerful and where we're at. Everyone seems to think Claude's the most advanced. It's not. It's pretty good. It's very good, actually. But there are better LLMs out there that I will be using more and more of, knowing that they're better than this one. And I'm not talking about, these are unknown LLMs that people don't know. Okay. So there's this document that's included to explain the overall strategy for this. Now, in fact, it's so advanced here. I could create slide deck now with all this fancy fancy paint stuff here. So here it's going in about this algorithm, this Avelenda Stoikov order flow enhancement. So it's basically going through as a summary to explain to you how this algorithm, based upon that PDF I just showed you, the time, like the performance you can expect out of this C++ I'm about to show you, and the expected Sharpe ratio using this formula. 3 in this environment's pretty strong. Anything kind of over 2 is doing well, but there's 100 million other people getting you probably similar performance on a Sharpe ratio basis. And these are all the features that you get out of this C++ I'm showing you, including a multi-threaded engine. Okay, so this is basically the architecture. We have our data handler, the strategy engine, the order manager, an order book manager, volatility estimator, and OFI calculator, and the low latency infrastructure. And again, this is all in one app based upon how I purposely architect this and how I get the AI to generate it. There are many people out there that will do their object oriented programming and blah, blah, blah. I will admit AI fails there big time, no matter what LLM you use. I just tell it to keep it all in one file, or is maybe maximum 2 files, 3 files. Okay, because the LLMs will get overwhelmed and will forget what you're trying to do with the first original prompt when you go into that chat mode or whatever you want to call it. So you have to keep all your coding in one file. I'm okay with that. And if you got an employer that says otherwise, yeah, probably the AI will not work for you. In my case, because I'm self-employed, I run my own show, but this is what works with the AI as it stands. So you see here we got multiple different layers, the order book, uh, and the coding samples. Again, 100% AI. Here's the compiler flagging to get the best performance. And again, you can combine FPGA coding to really boost it, or just keep it in C++. There's many, many techniques. If you were to take this program, the C++, into direct market access and, I don't know, CME and Aurora, whatever. Okay. But you can see here, it just breaks down all the coding and everything step by step in this code that I'm about to show you. That's how advanced it is. And that's why I have what I have. So here's the actual coding. Okay. So we have an HFT, high frequency trading, um, market making, market making piece of code. This is just one many examples, and this is not most optimal. This may not be the best performing. This is using the Claude, which is, as I said, is really, really strong at it. So let me just load up a sampling here. Let me do my old Sublime here. So here's the code. Oh, that's the bin. So everything's done in Linux, okay? Just so you know, you could deploy it on Windows using G++ compiler. But here's the code itself, okay, with a configuration file, blah blah blah. I'll explain that in a minute. let's see how big this complete program is. So we're at 1,800 lines, okay? And remember, you get the source code with this to demonstrate the steps that can take you to true HFT using probably the most popular asset out there, Bitcoin. All right. So this is not the optimal way because if it trends, this works great. But if you're waiting for the October drop, this may no longer work, and you have to redeploy something else when things are performing like gold, as I said, as examples. Okay, so let's go back to our file here. Okay, so again, this is all deployable on Linux. I do it through a WSL. Okay, Windows Subsystem Linux, the easiest. As I said, I'm using, actually, I'll show you how the build works. So here's the actual formulas and blah, 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 the strategy, like with that HTML presentation I showed you. These are the things it goes through, building it, compiling it, the low latency utility out of it, the market data. I have to stop right now. Again, this is using demo data, simulated data. Okay. This has not got anything hooked up to live data. And I keep saying this with the Rhythmic terms of service in their API documents or using the API itself from Rhythmic, I can't share the code. I've now gotten quite a few people wanting help on this. This is where you have to be an accomplished developer, okay, to take advantage of the C++. AI on its own is not going to help you because you really got to know how to, you have to really understand the theory of computer science, especially on the algo development and all that. See, and involving trading as well. So you can see here we have how do we optimize it? I'll just show you the different flags you can use on the compiler for G++. The market data structure, we have a volatility estimator, order flow and balance, limit order, the core market making equation that's pretty standard for a lot of firms. They may develop their own. That's the secret sauce that they have. We have the data simulators, I say, because it's not real data. We have a data loader, backtesting, parameter optimization. We have a live trading engine, so on and so forth. Okay, so I mean, it's all there, all of, and it breaks down the code line, section by section, with some kind of diagrams as well. This is your typical high frequency trading, ultra low latency type of program that you could have bought, dare I say it. And then there's also the building and deployment of this as well. And my technique is keeping everything in one file. So here we've got the complete breakdown of how to do all this stuff. Okay. So again, we're talking, as I said, build, the prerequisites in Linux. So you have to be pretty competent in Linux as well to really take advantage of it. To do it in Windows is very difficult if you use maybe CMake and the what's it called, MW whatever utilities. You could kind of do it. I would rather do it in Linux because everything's going to be done in Linux for ultimate for best performance, right? So we have different examples here of usage. This is where it gets very powerful. So we can have load in the data. We can run it with an optimizer. We can run so-called live data. Okay, and then it goes on about the coding techniques that you can use or your back file to optimize your Linux environment to really take advantage of it. Again, these are just samplings. Okay, these are just for demonstration purposes on how it's done. Okay, so we have here a script, a shell script to set up their environment. And then we have, again, something called CPU affinity. We could run another back test uh, within the Linux environment against this HFT market maker, so on and so forth. We can generate sample data. Again, AI can do all that for you. Again, 100% generated by AI. This is an absolute amazing package that you can get for all of this. Okay. So I'm just showing you this what's involved here. So if you are interested in learning what it takes to go into market making with something like Bitcoin, you kind of want to do it on a real exchange, where there's no manipulation that can be on a retail a retail crypto exchange, which takes place. I'm not going to mention names here, but it can happen. But when you're in a real regulated exchange, even for me to say that now after, it's bizarre for me to take advantage of that because there's just more manipulation, more corruption in a lot of these exchanges. I don't trust the trading environment. Whereas if you're in the CME with all the regulation that they have at the wazoo, it may be better because it's cleaner. There will be manipulation there as well, but it's not going to be as overt or as big as it can be on a retail exchange. Okay, with all the rug pulling and all that. So this is giving you a sampling in what institutions do, and I keep saying you want to be institutional like, well, how they trade Bitcoin. Okay, and this could be done on, in my case, Coinbase derivatives. They're going to unify as much as they can with Coinbase, with all the different exchanges that they own. They're going to consolidate, but there will be one that the likes of BlackRock, all the big ETF players are on Coinbase Prime for them, and the retail can get on there, but you probably have to have a certain account size to get on to Coinbase Prime. Just as examples, but this is what's available. I'm sure there'll be a buy button if you want access to this. All of this code, all of the demos will be available in a breakdown of each component here, be it if it's in the what I'm showing you here. But that's just a general overview of how this works. And we leave it at that. And all I could say is, um, you know, it's cool, you know, and hopefully you get a copy of it if you really want to learn how to do it. And it just summarizes what I've done pretty well all last year at the optimal where we're at. But I will continue to use LLMs and models that people don't know about to leverage better out of this. And we shall leave it at that. Thanks for watching and have yourselves a good day. Bye bye.